Ladies and gentlemen, good day and welcome to the GE Power India Limited earnings conference call for the fourth quarter and year ended 31st March 2023. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prashant Jain, Managing Director, GE Power India Limited. Thank you, and over to you, sir.
A very good afternoon and a warm welcome to all of you for joining this discussion on the financial year and the operating performance for the fourth quarter as well as the full financial year 22-23. I would like to welcome my team who will join me in answering your questions today and update you on the performance. I have with me Yogesh Gupta, our CFO, Vineet Pant, our Chief Commercial Officer, Venkatesh Rao, our Chief Executive Business Operations and Kalpesh, our Hydro Business Finance Manager. At the outset, I would like to start our discussion with some context on the global economic situation. The year financial 23 saw a shift towards a positive trajectory as global energy and commodity prices corrected, alleviating inflationary pressures. While major economies maintained a cautious stance, trade and investment sentiment turned more optimistic as central banks paused their rate hike cycle starting from the third quarter. Despite tight monetary policies and domestic inflation concerns in some developed economies, the world economy cautiously embarked on a path of recovery benefiting from easing supply chain pressures and a resilient labor market. Nevertheless, the pace of growth is anticipated to be modest as tight monetary conditions and a tighter credit market are likely to act as impediments. Coming to the Indian economy and power sector, despite a tight monetary policy to address inflation, the Indian economy remains steadfast on its growth path. The economy is propelled by robust investments in infrastructure, increased private capital expenditure, and strong consumer demand. The central bank's decision to halt interest rate hikes coupled with improved bank balance sheets resulting from corporate deleveraging has also contributed to positive developments in the services sector. There are indications of growth in credit and financial markets, reinforcing an environment conducive to investment. Coming to power sector, the onset of summer earlier this year has resulted in a substantial increase in electricity demand. With the concerns surrounding COVID now diminishing, the government has again shifted attention towards expanding renewable energy capacity. This emphasis on renewable energy has not diminished the demand for coal, however. In order to meet the rising demand for coal, the country has made significant investments in enhancing domestic coal production. In the fiscal year, domestic coal output reached almost 900 million metric tons, reflecting a growth of 14.7% compared to the previous financial year. Coal-based thermal generation accounts for 75% approximately of electricity generated, and according to the draft National Electricity Plan for 22 to 27, coal-based units, it is seen that apart from under construction coal-based capacity of 25 gigawatts, the additional coal-based capacity would be 17 gigawatts to 28 gigawatts that would be needed until 2031. As the Government of India is striving to provide affordable electricity on 24/7 basis, the Ministry has advised all central, state utilities and private plant operators not to retire any thermal units and urge them to carry out R&M, that is renovation and modernization, for life extension and improve flexibility, reliability and safety of thermal units, considering the expected demand scenario and availability of capacity in the future. For our company, the government's decision to extend the implementation of flue gas desulfurization for coal-fired power plants has resulted in a slower order intake than expected. Our strategic focus over the next couple of months will be on growing core services and R&M offerings as well as non-EPC and industrial service business This is what we have been focusing on for the last couple of years. Now talking about the quarter 4 performance, the fourth quarter has been excellent for service orders. We have been able to achieve 70% more orders compared to Q4 of the previous financial year, and the month of March has brought us a record high of 820 million, the strongest core service orders in a single month we've had so far. On the other side, FGD and upgrade opportunities are still converting slower than anticipated. The revenue in the fourth quarter has been 40% lower than in the same quarter of previous year, mainly due to lower orders in the previous quarters and project delays. The executive summary for the full year, if I have to focus, the financial year 2022-23 has been challenging with geopolitical impact on supply chains and high inflation rates. These factors, as well as the other regulatory 2-year extension of the implementation timeline by the government, has resulted in a slower turnaround for the company than we anticipated. Despite the challenging market environment, we have been able to grow our total orders by 116%, mainly due to strong project wins in services, and this segment continues to grow in the double-digit range. Our revenue is down by 31% and largely due to delays in ordering, which is impacting our backlog. In the past financial year, we have been able to successfully focus on the structure cost and reducing the SG&A. As we discussed in our previous earnings call, entire industry sector has made representation to the ministry and customers for exceptional relief for risk factors that are outside of our control in the execution of these FGD projects. As a result, we have been granted an extension of time relief from NTPC for a plus 8.5 months project delay due to COVID-19, which is helping our company mitigating cost escalations on loss 2 and 3. The impact we will expect to see in the coming quarters. However, this does not help us in the lot 1 projects, and for which we will continue to represent to the ministry and to NTPC. For discussions on the financial operations, I would hand over the call to Yogesh, and after this we will open the forum for question answers. Over to you, Yogesh.
Thank you, Prashant. Good afternoon, everyone. I am pleased to welcome you all to discuss financial and operational performance for the fourth quarter and full financial year ended March 2023. Lower than expected industry demand and subsequent lower order intake in the last few years has impacted revenue and margin for the quarter and also for the financial year. During the quarter, the company got orders worth 228 crores against orders of 138 crores in Q4 of FY22. FY23 order intake stood at 1,635 crores against order intake of 765 crores in FY22. As of March 31st, 2023, we have a healthy order backlog of 3,615 crores, which presents active revenue opportunities in hydro, FGDs and service segment. Revenue for Q4 23 stood at 344 crores, down from 591 crores in the corresponding quarter of last year. And the revenue in Q4 23 is also lower than the revenue of rupees 533 crores in Q3 23. Revenue for FY23 stood at 1,796 crores, down from 2,620 crores in FY22. Moving on to loss before tax for the quarter Q4 23 after the exceptional items was rupees 128 crores against loss before tax for the quarter Q4 22 after exceptional items of 145 crores. The loss in Q3 23 was minus 30 crores. The increase in loss before tax for the quarter Q4 23 as compared to the previous quarter Q3 23 is due to increase in cost estimates of Shurapur project to the extent of about 12 crores, lower volume, under liquidation, lower capacity utilization, delays, inflation and execution challenges at site. Loss before tax for the financial year FY23 after exceptional items was 334 crores against loss of 293 crores in the financial year FY22. Loss before tax for the financial year FY23 is mainly due to the following: impact on account of lower volumes, project delays and inflation. Sholapur fire incident, almost about 100 crores impact, and 70% of this is likely to be recovered from the insurance company in the current year and the subsequent year. Generic risk provision creation, provision for doubtful debts due to non-receipt of payments from some customers, Dugap restructuring to the extent of 11 crores, and forex losses. Summarizing, focus areas for the company are volume increase by fresh order intake, claim settlement, cash collections. On the cash, we expect to be debt-free by the end of current financial year. We now open the forum for the Q&A.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, good evening, sir. Thanks for the opportunity. The first question is, sir, on the order inflow. How do you see the order inflow for the FY24? FY23, I believe, was still subdued. And do you see FGD activity picking up in FY24?
Thank you for the question. What we see is there are opportunities. We are L1 in certain tenders. However, because the government has extended the timeline by 2 years, the time to convert those orders into the tenders into orders is taking a bit longer. I would ask Vineet to add on this. On service side, as I said, we are seeing a good growth and the teams are faring quite well. On the FGD, unfortunately, because of the delays in the extension timeline, the orders are not converted. Vineet, would you want to add?
Yeah, so I would say yes, Prashant, you are right. The order intake, ordering has been slower than anticipated. But at the same time, I would say as compared to the last financial year overall, order intake, order placement has been good this year, because we have seen almost 20 gigawatt has been ordered this as compared to only about 9 gigawatt last year. So overall, ordering of FGD is higher. But as you pointed out, Prashant, some of the deals which we have been pursuing, we are in a good position, but those have not been converted into an order. But going forward, I think with the timeline coming, financial year 26, December 26 is the last date for the installation of new year. We expect ordering to pick up going forward.
Yes, sir, what do you include in the services? Can you just please explain? Pardon my ignorance. Yeah.
Can you repeat?
Pardon my ignorance. What are the things you include in services?
So in the services business, we have the services to the existing coal-fired power plants in terms of supply of parts, repairs. That is what we call basic services, parts, repairs as the core services. And then there is retrofits and modernization, which we call upgrades. So those are the two components in services for the coal-fired power plants. There is a very small amount of internal service that we do for gas and a very small amount of hydro service, but largely the service, when we say it's the service for the coal-fired power plants, and that business is doing fairly okay.
And sir, is there any opportunity for us for repurposing the power plants so that they can run at 40% PLF?
Yes, we do see opportunities. Vineet, if you want to add.
Is it a large opportunity or a small opportunity?
No, right now, it is just, so we are working on certain study. We have discussing with some customers to do the testing part. So right now, customers have started with placing orders for carrying out the testing, and subsequently, they will, start placing orders for making the changes, in the equipment. So this is, we expect this to take off in maybe another 6 months' time.
And is it a large opportunity or small opportunity, sir, in this
No,
terms?
I will not say they are very large. It would be a smaller size.
Understood, sir. Last question, sir. What are the impact of Solapur fire incident on our P&L?
Yogesh?
The impact of the Solapur fire incident has been to the tune of about 100 crores is what we have provided for in our books. And once we get the insurance claim sorted out and settled, we would be getting almost about 70% of this recovery.
Understood, sir. Thank you, and best of luck. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Danish Mistry from First Advisors. Please go ahead.
Hello. Good evening, everybody, and thank you for taking the time out to talk to us. I had just 2 questions. The first is a bit clarificatory. What is the total outstanding order book that we have in it? And in that outstanding order book, what is the percentage of service orders?
We have 36.1 billion, to be precise, 3,615 crores as our order backlog.
Correct.
As of 31st March 23.
Haji.
Of this, we have about close to 40% is in the range for the steam business and about 60% for hydro. And almost about 15% is services in this.
So 15% of 3,000...
3,615 is services.
Is the services. Got it. And you said 40 is steam and 60 is hydro.
Yes.
So that would include that the Orissa project as well.
Which Orissa project you are talking about?
The Subhanshari one, which we restarted.
Subhanshari is not Orissa.
Okay, sorry. Yeah.
In Assam.
Okay.
Yeah.
Got it. But it's included in that project.
Yes, please. Yes.
All right. Okay. Just one more question I had is that if you were to see, our receivables have, I think, reduced a bit as per if I see the balance sheet data. So just to understand, and you did touch upon the fact that you plan to be debt free. So is it safe to assume that all of it would be through receivables recovery? Depends on how much of receivables we can recover this year from this 1,900 crores?
We are targeting about, you can clearly say, like we have 2 kinds of receivables. We have pension and the normal letter. Mm-hmm. And when we say we will be debt free, presently we have borrowing of 291 crores.
Haji.
So we are talking of being debt free by repaying this debt that we have of 292 crores approximately from external and the internal sources. And the cash that we are targeting is in the range of about 1,300 crores at least.
Recovery?
Yes, please. From our customers? Yeah.
Oh, okay. Got it. And the current cash that we have of 213 crores on the balance sheet, is there any part of customer advances in this, or is this our own cash?
Yes, we have customer advances also in this, to the extent of almost about 335 point some odd crores. Just give me a sec, I will give you the exact number. Mm-hmm. Yeah. So we have like customer advances. It's almost 35 crores, 46 lakhs to be precise.
Oh, customer.
These are the customer advances from the major customers, and another 2-3 crores you can take from others, so total 38 crores will be cash.
Okay. Yeah? Okay, and got it. Just one last question. So if I heard correctly, you're saying that this year we'll get 1,300 crores of cash inflow from the receivables. Is that correct?
Yes. Yes, please. Receivables and retention. And if we are able to achieve the milestone that we are targeting, So this is what we are targeting to achieve.
Got it. Redemptions meaning what are redemptions?
Retention.
Oh, retention. Yeah, retention. Yeah. Retention. I understand. Yeah. Okay. All right. Thank you so much. This is a very good luck.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
So one clarification, sir. On Suvansity, when do you expect this project to get over? And is this order book, whatever order book is left, will be completely executed in FY24? Is that correct assessment?
Can you take that, please?
Yeah, so we expect this project to get completed in August 2024.
Okay, understood, sir. Thank you, sir. Thank you. All the best. Thank you.
Thank you. The next question is from the line of Parshva, an individual investor. Please go ahead.
Hi. Can you kindly just give an overview of what exactly a company is doing and into what avenues are we going to go ahead being a foreign company?
Vineet?
Okay.
Yes.
So we are, as we have shown, FGD is a market which is going to be there. We have seen about 112 gigawatt has already been ordered, but almost 114 gigawatt remains to be ordered. So that is, FGD is going to be there going forward, and we are, of course, focusing on, cash accretive deals. We are going to be selective for these projects, but definitely we see a big market for FGD going forward next 3 to 4 years. That is one part. Services, as we have mentioned, we have two parts. We have core services, and then we have the upgrades. Core services, we have done very well last year. As we have seen, we have grown almost 20% over the previous year. Last quarter, of course, was exceptional. We grew almost 70%. So that is again another segment we're going to continue and be a strong player. Upgrades, service upgrades, we have not done well last year because, as we have mentioned, order intake has got deferred for various reasons. But going forward, we are already seeing a lot of market is opening up, especially for NOx deals. We find a lot of orders are getting finalized. There is a lot of pressure to complete the installation by 2024. So I think that is something which is, going to be very strong. And so basically, we are going to focus on, just to summarize, coal, hydro, as and gas.
Thank you.
Yeah, so thanks. I'll just continue on that. So the business of the company largely is coal, which is roughly about 80%. When we say coal-fired power plants, we are into new build. New build, when we say we do have the factory in Durgapur, which was producing and supplying boiler pressure parts for the coal-fired power plants. Then we have the emission control equipment, which is FGD, NOx, etc., which is a part of the project portfolio. Then we have the other components, which where we do services of the power plants, which is across the entire power plant, which is parts, repairs, services, and upgrades of coal-fired power plants. This portfolio is roughly 80%. And then hydro, we do pumped hydro storage projects. We do get one large project once in a while. And then usually the execution timeline for these projects is larger. And then the third business is gas, which is pretty much internal captive business. And that business is on new build side, where we do provide certain services to the global gas companies, but this is less than 3% of the volume. So it's a very small portion of the portfolio.
Thank you. The next question is from the line of Ramesh, a retail investor. Please go ahead.
Hey, hi all. Good afternoon. Thanks for this opportunity. I just wanted to understand the status of deal promotations, whether we receive any update from the promoter? And second, what would be the roadmap for our company in near future? If you consider this FGD orders and other pendings, once they are done, then what would be our activity or the regular business to support the company as well as to the investors? And the final question: so what would be the reserve we have once we planning to debt our company by next quarter?
So I'll take the first question on the depromoterization. We will update you as soon as we hear something from the company. The company has announced, the promoter has announced 36 months for the depromoterization, and at this point in time, we do not have update on that. In the meanwhile, though, the company's strategy, we know that the new build coal demand was dead for the last 4 years. There was a market in FGD, and therefore the company's strategy was to be an emission control company, support the market with its FGD technology, where the company has a big advantage. The second focus area for the company was to develop and grow the service business, which is constantly on track with almost 15 to 20% growth that we have demonstrated in March, and we continue to see a good response on the strategy going forward. That was the second element of the strategy. Hydro is selective orders as we see as it meets our profile of risk, margin, etc. very selectively, only if it's a private player. Then we are picking selective orders on hydro. And gas is a very selective internal captive business where we continue to operate with a cost plus margin, which has been marginally declining because there are not many global new gas projects that the company has been taking, but this is an internal captive business. So this is pretty much was the strategy with which we wanted to move towards a transformation to say, okay, short term there is a demand, we address that demand, and then we start building new capabilities. As we see depromoterization happening, then we would enter into new areas of business. Unfortunately, due to the delay in FGD demand, we are L1 in certain tenders, but the tenders have not converted into orders because of the extension of timeline by the government for 2 years. We have optimized the capacity for Durgapur to 180,000 hours, where we have a tremendous capability to offer not only pressure parts for boilers, but also to other metal fabrication industry. So this shop now has no new boiler order pending on the shop floor, but we have been able to roughly get about 100,000 hours loading. The capacity is 180,000 hours. So we've got about 100,000 hours loading on this factory, largely from service and some new non-boiler areas. And we are working to expand our offerings into this area so that we can get more load to the factory. So we have optimized this factory from about, which was roughly a few years ago, about 800,000 hours capacity, last year about 250,000 hours capacity, down to 180,000 hours capacity. We don't think it makes sense to go further below this capacity. We need to maintain the competence. And now the focus is on bringing orders and trying to bring back growth. So the strategy for the company in the short term is to ensure that we continue to grow service. We continue to improve our industrial service orders and industrial orders, and then to also capture as much FGD as we can in the next couple of years as the demand comes back. This will provide certain, and also we execute the orders well, collect the cash. As we do this, and as we move to the next phase, then we will move towards the next phase of strategy. And that is currently the bridge to ensure that we collect cash and become cash positive, and we execute the backlog well, and start the new areas of operations into Durgapur, and eventually build a bridge to the future. So FGD pretty much is a very important segment of the strategy to build a bridge in the interim towards the future. So that is where we are in the strategic planning process. As regards your question on the cash collection, of course, the cash that Yogesh mentioned, we will be cash positive by end of the financial year. And after that, the cash reserve, I think I will ask Yogesh to comment on that.
So basically, we would be starting building up our cash equity beyond 31st March 24. So which will come handy in the future, like acquisition of business, and if at all we look for some expansion. I hope that was the question, Mr. Ramesh.
Thank you, sir. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Danish Mistry from First Advisors. Please go ahead.
Hi. Thank you again for taking my question. Just one question. This repayment of the borrowing, do you plan to do it by 31st March 24 or before that?
Well, Mr. Mistry, we would be targeting to do it before.
Before.
Yeah.
Okay, got it. And the 1,300 crores also we'll receive by 31st March 24 in terms of receivables and retention.
Yes, please. This is basically in this what we are looking at is there are certain revenues that we'll be doing. So as per the contractual terms, whatever money is due against supply, etc., will be also covered. So this is what we are targeting to collect over the period of time in the coming quarters.
Got it. Thank you so much. Thank you so much.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. As there are no further questions, I would now like to hand the conference over to Mr. Prashant Jain for his closing comments.
I would like to thank you all for joining the call today, and I'm happy to have been able to address your questions. Looking forward to speak to you in the next call. Thank you all, and thank you, team.
Thank you, members of the management team. Ladies and gentlemen, on behalf of GE Power India Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.